From Kansas State University, this is Agriculture Today. Eric Atkinson with you. And ahead today, K-State's Dan O'Brien will review the latest news on U.S. grain export business, and he'll go over his updated balance sheet and price outlook for corn during Dan's weekly segment on the grain market trends. He'll be followed by K-State's Mykel Taylor and Reid. They'll have the word on the upcoming K-State Farming for the Future programs to be held in December and January at 4 locations around Kansas. These will offer a host of outlook talks to aid you producers in planning for the economic challenges of 2018 and beyond. Later on, back with her weekly update on Kansas agricultural weather, K-State's Mary Knapp. All that and more right here on Agriculture Today.
Hamburgers, roast, ribs, steak, or whatever you prefer. Beef, it's what's for dinner. Kansas cattle farmers produce 7.5 million head of cattle per year. It takes about 7 tablespoons of peanut butter to get the same amount of protein in 1 serving of lean beef. Support your local Kansas farmers and ranchers. Eat beef. This message was brought to you by the K-State Animal Sciences Leadership Academy participants.
Grain market comments coming your way first here. Dan O'Brien is standing by from his office in Colby, Northwest Kansas. He is a K-State Research and Extension grain market economist. Dan, eventually here as we talk this time around, we'll get into your updated price prospects for corn and wheat heading into 2018. But let's step back and look at what's going on with grain exports. We find that in the feed grain complexes, corn and grain sorghum are actually, business-wise, going in opposite directions.
Yes, the shipments for exports for grain sorghum this week were at 5.2 million bushels. When I say this week, it's the last week that the USDA Foreign Ag Service has reported on it, be the week ending November the 2nd. 5.2 million bushels. We need a pace of about 4.3 to meet the USDA's projection. So as grain sorghum sits, it has 13% of the USDA's projection, about 210 million bushels, actually shipped, about 41% total shipments and orders together, and here we're about 19% of the way through the marketing year. So that's a positive. Actually, on the corn side, the USDA's projection, its anticipation, isn't that bad of a number, about 19.25 billion bushels, but we've been slow at the beginning of this marketing year. Again, the last full week of numbers that we had, again, for November the 9th, was at 16.4 million bushels, and we need about 40 to meet the USDA's projection. So running off to a slow start for corn. Now, again, once we get harvest all out of the field and ourselves in position to compete strongly in world markets for exports, that could change. It seems that, at least at this time, one of the reasons for a slow start is just price competitiveness. It seems that the Brazilian net price in the market, by the time you look at currency and their cash prices they're offering at their ports, they're down a bit lower than we are, at least at this time. So we'll see where we're at as we move along and Brazilian supplies start to fall shorter in terms of availability. I don't doubt that our numbers will move higher, but at least at this time, when our futures market, cash markets, are in a doldrum without question, gosh, it'd be nice to have stronger exports to help spur that market on.
On the other hand, again, grain sorghum exports are termed positive, maybe even bullish. Is that being reflected in local grain sorghum basis, in local prices, as we have these mounds of sorghum stacked up out there again?
You sure see it in the basis levels. That Salina on yesterday's market closes November the 16th. We had grain sorghum basis at 15 to 20 cents under these futures. Corn basis, same locations, 45 to 47 under. You look at Hutchinson for comparison, corn basis 25 under. Grain sorghum basis in Hutchinson, again, with a variation of locations, some terminals, some other farther out country elevators. The best basis bids were at 15 under, again, a dime advantage. So in those central Kansas markets, we, again, which are set up all that much more to feed the export market, you see the basis differential. When you look at out into western Kansas, even there, grain sorghum and corn basis bids are about par. At the Colby location, you got Grain sorghum basis about 40 under, corn basis about 42 under again. So even there, grain sorghum a little bit to the positive. And you look down to Scott City, corn basis 20 under, grain sorghum basis, though, at 50 under. So, again, it varies out to the west, a little more consistent to this in the central and east in terms of grain sorghum basis levels and prices being very competitive with corn.
Before we leave the export discussion, though, let's throw in a word about soybean business. The general drift of that is that sales are rather positive and maybe even toward the bullish side on soybean meal.
Yes, we had, for the week ending the 9th of November, we had sales of about 316 metric tons. We need a pace of about half of that to meet the USDA's projections. So that was an outstanding and really kind of an exemplary week, in that the weeks prior to that weren't as much. So that's a positive, of course. For soybean, unprocessed soybeans, had sales of about 83 million bushels. Need a pace on a 12-month year of about 39 million bushels to meet the USDA's projection. Again, if you look at it as a 6-month marketing year, we need a pace of basically double that, which would be just under 80. So we're running at or above the pace we need to meet the USDA's projection if you cut it down to, again, half of a calendar year. So that's to the positive. And I think even though elite soybean futures, now the January contract, have fallen just like corn futures have and just like wheat futures have, still, if you look back to last summer, we have more of an uptrend, more of a positive trend on the bean market than we've seen, well, for either for wheat or for corn. And I think so much of that has to do with just the continuing strength of Chinese export demand for that product. I would say when you look at the pace of U.S. soybean shipments, though, and you look at who the U.S. ships soybeans to, we're still seeing China by far and away the largest buyer of U.S. soybeans. But even with that, we're down 18% this year at this point in time compared to where we were a year ago. Again, large South American crop, particularly in Brazil, providing strong competition for us, and we're feeling it in terms of weaker cash prices right now, especially towards the tail end of what's left of harvest. Again, we're struggling in terms of futures and cash markets, and this mixed to struggling message that the market's observing on the export side isn't helping anything in terms of seeing some type of cash price recovery.
Well, once again, you have worked up your updated balance sheets for corn and wheat for new crop marketing year 17-18, and they're in your weekly notes on the trades, which are, by the way, listeners, on agmanager.info. Taking up what you've come up with on the corn price outlook, summing that up, it just seems that in about any scenario, this market's going to be hard-pressed to get back up above that $4 watermark.
Yes, I think we're at the place now where we'd be happy with $3.50 or $3.75 for the futures and give us $3.25 to $3.50 in a lot of cash locations around the state. Some of the better ones on yesterday's market for corn out in the western part of the state. Again, you see $3.24, $3.32 at Garden City and Sublette. Sublette with that $3.32, Ulysses at $3.30. So again, even at our best bids, we're looking at prices that are below $3.35, below $3.40, something like that. So you wonder, again, what are the prospects for moving higher than that? Well, again, we're at the tail end of harvest. Piles of corn, grain, sorghum dot the countryside from community to community. You see them. So it's probably about an 80% chance that the USDA's projection, which is historically pretty conservative, of about 2.4, 2.5 billion bushels to carry over, 17% stocks to use, 320 prices is probably right. Towards the end of this marketing year, there's still this issue out there to be dealt with, I think, in terms of what the slow planting of soybeans in Brazil will eventually bring about in terms of a contracted season for second crop corn down there. So move into the summertime months here in the U.S. So late spring and summer could start to feel that. Of course, right now we just have abundant grain, and it's not really showing in the market. Probably about a 10% chance of that scenario, but again, we wouldn't see the fruit of that until we move out off into the summer. I think there's still some chance, say, call it 5% chance, we get to that January report and the USDA make some adjustment lower on their final corn yield number and their production number, to the tune of 200, 300, 400 million bushels lower. And right now, to have 172, 173 bushels per acre and a 14.3 billion bushel corn crop for 2017 won't change the underlying fundamentals a lot. We still have about 2 billion bushels of carryout. So here, the USDA has projected about 320. You could see from either higher exports, lower production, something up to 340, 350 eventually in the market. But again, those numbers aren't $4 corn and not $3.75. We're looking at 20 and 30 cent gains rather than any big home run that would dramatically change the market. For the dramatic change to come, what you'd see out there eventually would have to be something along the lines of dramatically increased ethanol demand, crop problems emerging as we head out off into spring of 2018, issues like that. Right now, we basically have a lot of supplies around and are wanting to gain 10, 15, 20 cents so people can get just a little bit better price for cash sales. That's kind of the situation we're in right now in the feed grain markets.
All right, and briefly here, you've gone through the same exercise on the wheat side. Anything more positive to say based on those numbers?
There's always the possibility of higher exports. We've had some emerging dry conditions. The last 30 days have been pretty dry for wheat production in our own country. Uncertainty about what can happen for the coming crop in the next year. So right now, we're probably in the mode of storing wheat, waiting to see what will happen once we get through the wintertime period, break dormancy in spring for winter wheat, and then see what we've got in terms of market prospects.
And again, do check out Dan's notes on the markets at agmanager.info, updated each week. Dan, always appreciate the time, and many thanks to you.
Thanks, Eric. Take care.
He is Research and Extension Grain Market Economist for K-State, and he operates out of Northwest Kansas, Colby. That's Dan O'Brien, and we'll return shortly here on Agriculture Today.
Did you eat today? Thank a farmer. A way to get more involved in agriculture is through 4-H and FFA. Through 4-H and FFA, we have been given multiple opportunities to grow as leaders and learn more about agriculture.
You can learn skills related to jobs, public speaking skills, and you get the opportunity to travel around the country and meet new people.
If you want more information about getting more involved in 4-H and FFA, visit them on their websites at kansasffa.org and kansas4h.org.
We're back now on this Agriculture Today. We are all well acquainted with the economic challenges that are facing farmers and ranchers heading into 2018. It's with that backdrop that we tell you about a series of meetings that K-State Research and Extension will be hosting in December and January. They're organized by the Agricultural Economics Department here at K-State. These are called Farming for the Future. And to fill us in on what these are about and why they're being put on, two Research and Extension agricultural economists, Reid and Mykel Taylor. This is a continuation of meetings that were conducted last winter. Robin, you might tell us the initiative behind these.
Sure, Eric. I know a lot of our producers around the state attended the top 10 considerations for navigating the struggling farm economy last year, and we wanted to follow that up this year with a series of meetings kind of looking forward. What are we expecting to see in the economy in the coming years, and how you plan your operation based on those expectations?
And that atmosphere of which you speak, well, Mykel, there are concerns out there, right?
Absolutely. We're in year 4 of economic downturn for the farm economy in Kansas. And we need to be looking forward and figuring out how we go from here, depending on what prices do, but just planning and trying to make sure that we're there for the next couple of years.
So you've put a program together which is rather all-encompassing, or at least as much as it possibly can be, in addressing what producers need to be thinking about and how they might respond.
So what we have is a lot of outlook talks looking at the land values, rental rates, cattle and grain outlooks, input costs, and just a macroeconomic interest rate talk. And then we kind of break it at the end into individually as a farm operation, how do you look at farm financial management and what can you do as an individual operation to set yourself up for success in the coming years.
As you two look at this program and have planned it, whom do you envision it's really for? Is it for all producers, for those producers who are already encountering economic difficulties?
I think anybody can benefit from this, no matter where you're at economically, in terms of your individual business. You're going to be planning forward-looking. You need to be. So I think this is really something that any producer could benefit from. And we also keep our meetings open to ag lenders, input dealers, anybody else who is interested, landlords, who would benefit from knowing what's coming. But yeah, I would say we're open definitely to all producers.
Now, there are 4 locations scheduled. We will repeat these as we go along here, but initially to let you know, December the 14th in Pratt, the 19th of December in Salina, then over into 2018, January the 10th in Scott City, and the 11th at Emporia. There are roughly identical programs at each site. Robin?
Yes, they will be identical. We will have some variation in speakers as we go across the state. We're going to include our KSU Farm Analyst team on this program, representatives from Kansas Farm Management Association, as well as a lot of specialists from our department.
Now, each of you will be on the programs at some point or the other. Mykel, you will be at all of them, presumably, and addressing Kansas land values and rental rates, correct?
Yes, just tracking the land value market. We've been in a downturn, see where that's headed going forward into 2018. Talk about rental rates and whether or not they're budging, what kinds of strategies maybe that folks can use to talk to their landowner and tenant about where they want to be for 2018 rental rates.
Now, we've had this conversation about rental rates before. You want producers to be open-minded about the structure of those rental rates and whether they're working for the current economic returns to farming.
Right. I'm all in favor of communication and, good conversation between landlords and tenants. And that's where a meeting like this can be very beneficial because it's going to tell both landlords and producers, what things are shaping up for 2018 in terms of commodity prices, interest rates, so on and so forth. And you can put that kind of forward-looking information into your budgets for what you're planning for expected revenues for next year. And that's really important for figuring out what you can afford to pay.
And Robin, for your part, you'll be involved in the farm financial management discussion, right?
Correct, Eric. And kind of our goal here is just to help producers individually for their farm figure out what their goals are and how to attain those goals for the coming years. Some things we're going to touch on: proper debt structure. We have a lot of farms that are getting their operating loan balances up and not being able to pay those down, so maybe some refinancing, maintaining working capital, having money to pay inputs for the coming year, controlling your costs, managing cash flow. There's all kinds of different ways that farm financial management can take to help you prepare for the coming year.
So lots of things to cover here. Glenn Tonzer of your staff will be taking a look at the livestock markets and helping with the overall farm financial outlook there. You've folks from the FSA, Farm Service Agency, to address farm loans. You're trying to make this as comprehensive as possible then.
We know that the Farm Service Agency loans are kind of a hot item right now as far as helping some of our farmers across the state that don't have access to traditional loans. So we wanted to make sure to get that on the program again this year to make sure we let everybody know about those services.
You even have a session on the macroeconomy. Your colleague Brian Brigham will talk of that and interest rates. Mykel?
Yes, which is really important for deciding whether or not you want to be locking in interest rates now if they're anticipating to go up, or if we've still got a couple years to expect of lower interest rates, and how you want to manage your finances accordingly.
And we don't want to overlook that our colleague Dan O'Brien, whom you heard from earlier on the broadcast, will discuss the grain market outlook. Is very germane to all of this. As a quick footnote, but nonetheless important, Robin, and we did bring this up when we visited with Dwayne Hunt of the Farm Analyst Program a few days back, these Farming for the Future workshops are a great prelude to a series of farm financial workshops which will feature the services of Farm Analyst later on.
So our goal with these, Eric, was try to have these intro meetings, which are the Farming to the Future meetings, 3 weeks or so ahead of time when we'd be coming through and offering individual farm financial management workshops. So we encourage producers, if they attend one of these meetings, they can sign up for a workshop at that time and get that individualized help that they might need, or just the second set of eyes to look at their operation going into the future.
And those will be taking place, those farm financial workshops by title, once more at 5 locations around Kansas. Quickly to list those: January 11th and 12th in Salina, January 23rd and 24th in Kingman, February 7th in Colby, February 8th in Dodge City, and February 12th and 13th in Emporia. Those are fully outlined at agmanager.info for those interested in enlisting the services of the Farm Analyst Program. As far as participating in one of these Farming the Future sessions, you do recommend early registration, if at all possible, correct?
Yes, the more we can plan, it will be a full-day program with lunch included. So we were asking for registration 5 days prior to the event. We will take walk-ins the day of, but the registration fee will just be a little bit higher.
And $20 if done in advance, $30 at the door.
And you can register at the host location with an agent in the local office, or you can register on the agmanager.info website under events. We can take a credit card registration there as well.
Very good. Agmanager.info is the source for getting that taken care of. Mykel, just to let you finish up by making your best pitch to producers why they need to take one of these sessions in.
Because we need to plan for the worst and hope for the best when it comes to looking at our farm financials and our expected returns to both the crop and livestock enterprises. So this is our way of trying to get as good information as possible out to producers and help them make the best decisions they can for their operations.
Once again, it's the Farming for the Future series, which is upcoming very soon now. We would encourage producers to take one of these 4 in. They're well dispersed throughout the state, so they're quite accessible. And Mykel and Robin, we wish you the best, both of you, in preparing for them. Appreciate your time as always. Thank you.
Thank you, Eric.
Thank you.
Along with us from K-State Research and Extension Agricultural Economics, Mykel Taylor and Robin Reid. Once again, here's the rundown for the Farming for the Future sessions taking place in December and January. Thursday, the 14th of December in Pratt, then the 19th, which is a Tuesday, in Salina, then in January on the 10th, which is a Wednesday, in Scott City, the following day, Thursday, January the 11th, in Emporia. Once more, get your early reservations in through agmanager.info. While we've a brief moment ahead of the break, we'd also inform you of another conference coming up in early 2018. K-State Research and Extension is a co-sponsor of this one as well. It's the annual Women Managing the Farm Conference. This event has become quite renowned over the last several years as a setting in which women involved in agriculture can hone their skills and knowledge, gearing up for success in this competitive agricultural environment. During this 2-day conference, attendees select from presentations covering a wide assortment of topics, including farm finances, relationships and health, agricultural and estate law, crop production and marketing, management, and much, much more. We'll be digging into the particulars of this conference as we draw closer to it, but just an early heads up on the 2018 Women Managing the Farm Conference. It is now scheduled for February the 15th and the 16th here in Manhattan. You can find out more about it, or you can go ahead and register right now at womenmanagingthefarm.com. womenmanagingthefarm.com. You're listening to Agriculture Today.
While many people know hunger is an issue in developing countries, it is also a problem in our own backyards. In 2010, 1 in 7 Kansans struggled to put adequate food on the table. 2 K-State Research and Extension programs are tackling this problem. The Family Nutrition Program and Expanded Food and Nutrition Education Program reach thousands of Kansans in more than 70 counties. They learn how to eat healthy with a low budget. For more information about these programs, visit ksre.ksu.edu.
This is the K-State Radio Network, and you're listening to Agriculture Today. Eric Atkinson here, as we turn now to today's agricultural news headlines for you, courtesy in part of DTN. Well, yesterday, the U.S. House of Representatives voted to approve that nearly $1.5 trillion tax overhaul bill The bill passing with a 227 to 205 vote, it would, among other things, cut the corporate tax rate from 35% down to 20%, a level set early in the debate over tax reform. Businesses would get immediate expensing of capital costs, but business interest would be limited and other tax deductions and tax credits would go away. The bill also doubles the estate tax exemption to $11 million for individuals, up from $5.4 million. The estate tax is phased out entirely after 2023 under the House bill. Attention now turns to the Senate Finance Committee, which continues working on its tax overhaul bill. The Senate will eventually be the chamber to watch on tax reform because Republicans hold a slim majority there. Now, some of the provisions of interest to agricultural producers in the House version, there is a reduction of a carryback provision on net operating losses from 5 years to 1 year, and only in cases of disaster. There's a repeal of the domestic production activities deduction, which allows agricultural cooperatives to pass on the deduction for certain production and marketing expenses to farm and ranch members, and sunset provisions in 2023 that would be linked to existing deductions such as bonus depreciation and Section 179. Also, the pay-go assessment of the Congressional Budget Office that the White House Office of Management and Budget would be required by law to sequester $136 billion in fiscal year 18 and similar funds each successive year. The National Conference of State Legislatures sent both houses of Congress a letter urging that the tax bill neither modify nor eliminate the deduction for state and local taxes. Under the House bill, farmers could still deduct property taxes as a business expense, but the deduction for home property taxes and state income taxes would be limited to $11,000. The Senate bill also would allow a deduction for business property taxes, but eliminates the deduction for home property and state income taxes. Delay for the effective date of the Waters of the U.S. rule is now formally being proposed by the EPA and the Army Corps of Engineers. That's according to a document submitted for publication in the Federal Register. Delaying the effective date until 2 years after a final rule on the proposal would maintain the status quo by proposing to amend the effective date of the 2015 rule and thus provide continuity and regulatory certainty for regulated entities, according to the notice. The EPA had previously signaled they would delay the effective date of the WOTUS rule, and the action announced does formalize that effort. This move comes as the agencies look to rework or scuttle WOTUS, and after its implementation was stayed nationwide back in October of 15 by the U.S. Court of Appeals for the Sixth Circuit. The WOTUS rule sought to redefine waterways under the Clean Water Act. In its proposal, the agencies cited President Trump's February executive order, which instructed them to review the 2015 rule. Given this move and the previous stay, the previous definitions of the waters of the U.S. that existed prior to the issuance of the rule would remain in effect until the EPA is able to promulgate a replacement. Comments on the proposed delay will be accepted for 21 days following its publication in the Federal Register. As mentioned briefly earlier, the agenda has been set for the 2018 Women Managing the Farm Conference, scheduled for mid-February in Manhattan. This joint effort of numerous agricultural organizations in Kansas has met with tremendous success in the past and promises to do the same once again. Marcia Boswell provides a full preview of this event now on this week's Kansas Wheat Scoop. Marcia?
Maximizing my influence. Farm Community Consumers. It's the focus of the award-winning Women Managing the Farm Conference, set for February 15th and 16th, 2018 in Manhattan, Kansas. Since 2005, this event has been bringing together women who help provide the nation's food supply. The Women Managing the Farm Conference provides a supportive setting in which women can develop the skills, resources, and knowledge needed for success in a competitive agricultural environment. Conference sessions and speakers are selected and designed to keep women up to date on the latest advancements in agriculture and thriving within their rural communities. During the 2-day conference, attendees select from presentations covering many topics, including farm finances, relationships and health, agricultural and estate law, crop production and marketing, management, and many others. Attendees also choose networking sessions tailored to the different roles women hold, such as agricultural partners and helpers, independent producers, absentee landowners, ag industry career women, and business managers. Optional pre-conference workshops are offered on February 14th, with activities including a farmer's guide to QuickBooks and connecting to consumers, storytelling, and content strategy for social media. The 2018 conference will open Thursday morning with an energetic program by Margie Geiler-Alanese, founder and president of Farm Her, an organization that showcases women in agriculture. Other general session presenters for 2018 include Naomi Bloom, agricultural economist and market advisor with Stuart Peterson, Allison Perry, community advocate with the Center for Food Integrity, and Mary B. Lucas, people connector and author of Lunch Meat and Life Lessons. Thursday evening's activity will feature Chef Renee Kelly, host of Kansas City's local TV show, Harvest with Renee Kelly. The show focuses on telling the stories of the relationship between farmers and chefs. Registration for the conference is available at womenmanagingthefarm.com with an early bird rate of $140 available through December 15th. After this date, the regular registration fee is $160 through February 2nd. The Women Managing the Farm conference is sponsored by various agricultural organizations. More information about speakers, programs, exhibitors, registration, and scholarships can be found at the website www.womenmanagingthefarm.com or by calling 1-800-432-8222. Keep up to date with the latest Women Managing the Farm news at facebook.com/womenmanagingthefarm. For Kansas Wheat, I'm Marcia Boswell.
Many thanks, Marcia. Well, it's been a while since Kansas has had a generous, widespread rain, and it sounds like it'll be a while longer. We'll get the word from K-State's Mary Knapp as she talks Kansas agricultural weather with us. After this break, you're listening to Agriculture Today. Legal and financial concerns surround the day-to-day management of the agricultural industry. Producers, ag creditors, and USDA agencies rely on Kansas Agricultural Mediation Services. If you've received an adverse decision from the USDA or have an ag credit concern, call today 800-321-3276 or visit us online. Kansas Agricultural Mediation Services, exploring options, generating solutions. Next up on Agriculture Today, our weekly Kansas agricultural weather segment. And back with us once again is K-State Research and Extension climatologist Mary Knapp. Mary, it's been a cloudy and drizzly week around a fair part of Kansas, but as far as beneficial moisture, it's been very little to speak of, right?
Right. The greatest amount that I've found in any of the reporting stations has been 22 hundredths of an inch, less than a quarter of an inch, and that was in Pittsburgh in southeastern Kansas, which they typically would see over an inch during the week at this time of the year. As you move west, of course, those normal amounts drop considerably, but no one got anything that's worth really talking about. The Central Division averaged 3/100ths of an inch, which is about 10% of what they would normally see. East Central averaged 3/100ths of an inch, which is 4% of what they would normally see. So again, not a very productive week as far as the moisture goes. But on the other side, temperatures were much cooler than normal, so the evaporative demand was less than would be typical with those very low rainfall amounts.
But when you look at it cumulatively, a large share of Kansas is now running behind on moisture for the fall?
Well, yeah, you could say about 2/3 of the, well, not even 2/3 of the state. The western divisions are all still ahead of normal for the fall, starting September 1st. The north central is also ahead of normal. When you get into the central divisions, they're not too far off. They're running both at 96% of normal. The area that's really being shortchanged in the fall are the eastern three divisions, and they're running southeast is the closest to normal at 77%, and the northeast and east central are 67, 66% on that September 1st to the November 14th time frame. Again, the eastern divisions typically see more moisture in the fall, so it's easier to dig your hole deeper when you've got further distance to go. Mm-hmm. But even in the western divisions where they are still ahead for the fall, this 3 weeks of continuous dry weather is taking its toll, and we really need to see some substantial moisture in order to not start painting our drought map with the yellows and oranges of deepening drought conditions.
We'll talk of whether that's in the offing here in just a second. These cooler temperatures, have they had any noticeable impact on our soil temps?
We have seen some cooling in our soil temperatures. We, on our Kansas Climate webpage, have a link to the weekly temperature and precipitation map. And if you go down to the special maps underneath that, we have some soil temperature maps showing both the 2 and 4 inch soil temperature averages for the week. They will also be part of the discussion Romulo Lolato has on week conditions in this Friday's e-update, so they can look at that, see that map, and see which parts of the state still have average soil temperatures in the 50-degree range, and most of the state has fallen below that. There was also an e-update issued on Monday where Dorovar Ruiz talks about fall fertilizer applications and the appropriate soil temperatures to minimize nitrate losses. Mm-hmm. And for that, you're looking more at the 4-inch rather than 2-inch soil temperatures, but that map is available as well.
Check that out, agronomy.ksu.edu. Click on the e-update toward the upper right-hand side of that page to glance directly at that information. So next week, the cards read that it may be a dry one.
Right, and that will be welcome for all of those producers that still have some harvesting to complete and for those that have holiday travel plans. But for many people, we're ready to have another round of moisture, and it is not in the cards. The quantitative precip forecast says there might be as much as 1/4 of an inch that accumulate, but that will be confined to the northwest corner of the state along the Kansas-Nebraska border and dipping a little bit into northeast and east central Kansas. But again, 1/4 of an inch is still below what would be typically expected for a week in November. The rest of the state, the quantitative precip outlook is for less than 1/100th of an inch. We may see a trace to 1/100th of an inch in locations, but pretty much looking dry for that week. And unfortunately, when we extend that to the 8 to 14-day outlook for the end of the month, that outlook calls for an increased chance of drier than normal conditions to end November. That doesn't mean we won't see any moisture at all, but it is likely to be less than we would typically expect.
And what's happening? We've systems bypassing us to the north. We have moisture to the south, but not getting this far north. So we are stuck in between.
Right. Basically, there have been quite a few active storm systems coming along the Pacific Northwest, but they've gone more zonally across the northern U.S. and have not dipped down into our region. There have been some slight signs of dips into the mountains in the west. In fact, they have winter storm watches out for the western Rockies and Colorado as we speak. But they haven't taken that dive down along the spine of the Sierras and kicking out in the Four Corners, which will bring that moisture into our realm. So what we get is a temperature swing, shift in the winds with some fairly strong winds, but not much moisture to work out. And that pattern is really expected to continue at least for the next couple of weeks.
As far as temperatures go, immediately ahead, it's a relatively mild day today. Warm conditions next week into the holiday.
Well, we're not really expecting super warm conditions. In the eastern part of the state, we're looking at highs in the 50s, lows in the 30s, which would be seasonal for this time of the year. The big switch is that we are expecting to see some sunshine out of this, which has been scarce for the first half of the month. So it will feel warmer, and with that increased solar radiation, we're likely to also see, and increased winds, we're likely to see some higher evaporative rates, which can dry things up much more quickly than we would want, again, given the fact that we're expecting a dry pattern for the next 2 weeks.
Enjoy your holiday break, and we'll get together again in 2 weeks, Mary. Thank you.
Thanks, Eric.
Mary Knapp with us, Research and Extension climatologist at K-State, with the latest from the Weather Data Library here at the University on Kansas agricultural weather. And our time's away for today. Thanks to you for being along with us. Until we get together again Monday, Eric Atkinson here. This has been Agriculture Today over the K-State Radio Network.